Video opens with a title card: How Central Banks Control the World's Economy. We see a rapid montage of vintage, black and white shots of the New York Stock Exchange floor, traders frantically gesturing at the London Stock Exchange and the bustling Tokyo Stock Exchange. The cuts become quicker, culminating in a slow-motion shot of a single, shadowy figure in a suit, the central banker, overlooking a digital map of the world's financial networks. They are the unseen architects of our financial lives, operating from behind closed doors in institutions of immense power. These are the central bankers, the modern-day masters of the economic universe. They don't command armies or rule nations, yet their decisions can create fortunes, trigger recessions, and shape the destiny of billions. But how do these unelected officials wield such extraordinary influence over the global economy? The answer lies not in swords or laws, but in their absolute control over the most powerful tool of all: money. At the heart of their power is a seemingly magical ability known as quantitative easing, or more simply, money printing. When an economy falters, central banks can step in and inject massive amounts of new money into the system. Imagine stylized digital printing presses whirring to life, not churning out paper, but creating trillions of dollars, euros, or yen with a few keystrokes. This newly created digital currency doesn't go directly to the people. Instead, it flows into the commercial banking system as central banks purchase government bonds and other assets. This electronic flood is designed to encourage banks to lend more freely and cheaply, stimulating spending and investment and breathing life back into a struggling economy. But creating money is only half the story. Controlling its flow is where the real artistry lies. Central banks have a sophisticated toolkit to either tighten or loosen the reins on the economy. Their primary instrument is the interest rate. Think of it as the main lever controlling the entire financial system. By raising interest rates, they make borrowing more expensive, which encourages saving and cools down an overheating economy to fight inflation. Conversely, by lowering rates, they make borrowing cheaper, incentivizing businesses and consumers to spend, thus stimulating growth. Another powerful tool is the reserve requirement, which dictates the minimum amount of cash that commercial banks must hold. By adjusting this requirement, central banks can directly control how much money is available for lending, acting as a secondary lever to fine-tune the economy's speed. The decisions made within the quiet halls of the Federal Reserve, the European Central Bank, or the Bank of Japan have massive, far-reaching consequences that ripple across the entire globe. A slight adjustment to an interest rate in Washington can trigger a stock market boom in Asia, a currency crisis in South America, or a shift in global trade patterns affecting millions of jobs worldwide. We see this in montages of recent history, the soaring markets of the last decade, fueled by low interest rates and quantitative easing, the sharp, painful recessions that followed when the flow of cheap money was tightened, the intricate dance of international trade and currency valuations. All choreographed by the subtle moves of central bankers, every major economic event of our time is inextricably linked to the choices these few individuals make. The video concludes with a final dramatic shot of the central banker silhouette, standing resolute against the glowing, abstract backdrop of the global financial system. The camera slowly zooms in, so while presidents and prime ministers may capture the headlines, it is the central banker who often holds the true economic power. They are the guardians of stability, the arbiters of growth, and the ultimate regulators of our financial world. Operating with a mandate but without a direct popular vote, they navigate the complex currents of the global economy, their hands firmly on the levers that determine our collective financial destiny. And in this intricate, high-stakes game, their influence remains as profound as it is unseen.